As we approach the looming threat of a significant economic crisis predicted for December 2025, the urgency to prepare becomes more palpable. Many experts foresee this upcoming downturn as potentially the largest financial collapse in history, a culmination of choices made following the 2008 financial upheaval. The U.S. government's strategy to stabilize the economy through extensive money printing has led to an alarming national debt, positioning the nation as the largest debtor in the world. As we look forward, understanding these factors is crucial for anyone hoping to navigate the impending storm and protect their financial future. Investing in hard assets has become a beacon of hope amidst economic uncertainty. Gold, silver, and Bitcoin stand out as critical components of a smart investment strategy. With the value of the U.S. dollar waning, tangible assets have consistently proven to maintain and even grow their worth. Personal stories from seasoned investors reveal that silver, once valued at a mere $0.10 per ounce, has skyrocketed to around $30 due to dollar devaluation. By trading portions of these hard assets for Bitcoin, many, including experienced collectors, see promising opportunities for preserving and expanding their wealth in the digital realm. However, the road to financial empowerment is hindered by a pervasive lack of financial education. Traditional education systems often neglect to equip students with practical financial knowledge, leaving many unprepared to tackle the complexities of money management and investment. This deficiency contributes to widespread debt and economic inequality that echoes through generations. By advocating for a curriculum that emphasizes investing, budgeting, and navigating financial markets, we can cultivate a generation capable of building wealth. Financial literacy is not merely an option. It is a necessity, one that can shield us from the economic tempests of the future and guide us to prosperity, regardless of prevailing circumstances. The key to wealth building lies in understanding these dynamics and taking proactive steps now. The American education system is under fire for failing to equip students with the necessary skills to navigate real-world financial challenges. Critics argue that the curriculum emphasizes traditional employment over entrepreneurship, shaping students into job seekers rather than innovators or investors capable of understanding and managing money effectively. This misalignment leads to a generation unprepared for the financial responsibilities awaiting them in adulthood, often resulting in poor money management habits. Further compounding the issue is the perceived influence of socialist or Marxist ideologies in educational settings. Detractors contend that these perspectives infiltrate the curriculum, distorting the information that students receive and undermining their understanding of capitalism and wealth generation. This ideological bias, critics claim, could present a detrimental impact on students' futures, particularly their financial well-being, by instilling a mindset that may underappreciate the value of personal financial education and autonomy. The necessity for robust financial education in schools cannot be overstated. Observers note that private institutions frequently offer superior financial education compared to public ones, leaving wealthier families at an advantage, while lower-income households struggle with the complexities of student debt. This disparity fosters a cycle of financial instability, particularly as those from financially disadvantaged backgrounds may lack access to practical financial training, which contributes to a cycle of debt that can persist for generations. The burden of debt starkly highlights the structural issues within the education system and the broader economy. Critics highlight the dramatic increase in student loan debt, which reached an alarming total of $1.8 trillion, attributed largely to policies enacted during previous administrations that facilitated loans without adequate consideration of repayment capabilities. This lack of foresight has not only deepened individual financial struggles, but also contributed to major economic instability on a national scale, ensnaring many young Americans in crippling economic circumstances. Political figures are not exempt from scrutiny, as charges are levied against leading Democrats for perpetuating these financial dilemmas through policies that inflate national debt and exacerbate student loans. Detractors claim this agenda poses a risk to the fundamental principles of capitalism. In contrast, support for leaders viewed as champions of capitalism, like a certain former president, reflects a longing for policies that prioritize wealth generation and economic freedom. Yet, the persistent opposition faced by such figures underscores the deep divisions concerning America's economic future. In the journey of wealth building, the emphasis should be placed on the types of assets accumulated rather than the income generated. This pivotal shift in mindset encourages individuals to focus on securing valuable assets that appreciate in worth over time, thus ensuring long-term financial success. Consider the example of multiple golf courses owned not for leisure but as strategic investments that yield passive income. Such assets continue to generate revenue without the owner needing to engage actively in golf, illustrating the power of wise investments in creating enduring wealth. As the speaker suggests, it's crucial to recognize that not all income sources are beneficial, and the true measure of financial health lies in asset acquisition. Investing in appreciating assets, such as gold, silver, or rare collectibles, further underscores a strategic approach to wealth building. These items often increase in value, safeguarding wealth against inflation and financial downturns. In contrast, money spent on consumer goods typically leads to depreciation, offering little return on the initial investment. By shifting focus to assets that can withstand market turbulence and provide financial returns, individuals can carve out a path toward financial stability. The idea is simple yet powerful. Wealth nurtures wealth when invested intelligently, leading to a cycle of financial growth for those who prioritize their decisions. Financial intelligence emerges as a crucial differentiator among various social strata. Wealthy individuals often possess a refined understanding of their finances, allowing them to navigate investment opportunities adeptly. This intelligence fosters an environment where money starts working for them, rather than merely serving as currency for day-to-day expenses. The emphasis is on fostering a shift in mindset, moving from a consumer mentality toward one that actively seeks out wealth-building opportunities. This transformation fuels the idea that acquiring worthwhile assets is more critical than merely increasing income. One personal experience reinforces the message: an antique jacket from the World War II-era Flying Tigers, which exemplifies how historical significance can elevate an item's value. Such rare pieces not only contribute to a diversified investment portfolio, but also connect individuals to rich narratives of the past. Lastly, the forthcoming campaign, Make America Rich Again, aims to empower citizens through financial education, addressing a knowledge gap that often hinders wealth accumulation. By equipping individuals with essential financial skills, the campaign hopes to instill a renaissance of financial literacy that can positively impact the nation's economy and help pave the way toward collective prosperity. In recent discussions, the growing chasm of wealth distribution has become a critical theme. The stark contrast between the opulence of the wealthy and the struggles faced by the majority encapsulates a troubling reality. It is increasingly apparent that the policies favoring affluent elites bolster their fortunes while trapping the lower and middle classes in cycles of financial instability. This systemic issue highlights not only the disparity in wealth, but the broader socio-economic implications of such inequality. Delving deeper, the influence of powerful elites cannot be overstated. These individuals not only garner access to superior education and exclusive financial opportunities, but also enjoy the benefits of significant tax breaks. This creates a vicious cycle where wealth begets more wealth, leaving the disadvantaged grappling with insurmountable hurdles. It raises questions about the fairness of a system where meritocracy appears skewed in favor of those already in privilege, stifling the aspirations of countless individuals yearning for upward mobility. However, amidst this discourse, a shift toward fostering capitalism coupled with robust financial literacy may serve as a beacon of hope. Advocates argue that capitalism, when navigated intelligently, can provide the tools necessary for financial freedom and equality. By empowering individuals through education about financial management, investments, and entrepreneurship, the potential exists to create a more equitable economic landscape where opportunities are extended beyond the elite. Moreover, the speaker emphasizes the significant role that inflation and currency devaluation play in eroding personal savings. As the dollar weakens due to rampant money printing, individuals may find their purchasing power withering away. Urging a proactive approach, the recommendation to invest in tangible assets like gold, silver, and cryptocurrencies such as Bitcoin emerges prominently. These investments not only serve as a hedge against inflation, but offer a tangible means of safeguarding personal wealth against diminishing currencies. In advocating for the free market as the foundation for wealth creation, a contrasting view towards socialism and Marxism also surfaces. The speaker maintains that capitalism incentivizes creativity, hard work, and innovation. Amidst these ideologies, the call for a renewed commitment toward embracing capitalism indicates a belief that the pathways to wealth can be opened for all, not just the select elite. With continuous engagement, nurturing financial intelligence may well be the cornerstone to securing a thriving financial future for individuals, fostering an economy where everyone can thrive.